Hey traders, welcome back to another hedging example video. How to really maintain your equity and create consistent gains within a safe risk format. I'm just letting the Forex test populate some data. So we've got a bit of price action to go off. I think I'll probably stop it about now. I don't know where price is going to go immediately. I haven't studied the daily data or anything there about for this. So I'm just going to go through, like I did on my last video, we exit for net gains every single time. If you're looking to do that, okay, myself and my co-founder, he's been trading for a very long time, teaching for absolutely ages. This stuff works. It works great, but you have to do it right. You have to. For me personally, I don't use stop losses. They're not necessary. You'll see that in this video. You don't have to buy into the religion of stop losses. And doing something different that people don't generally do gets you results in many industries. So we will get on with it. If you want to use Forex Tester 6 as well, leave a link underneath. Starting things off, remember to keep it very simple for all. We're going to have a max size of 0.1 and we're going to have a minimum size therefore of 1/10 of that. In this instance, because we've got a reasonable dip, I'm going to just take a half size and press resume. So I'll speed this up a little bit. Okay, anything reasonable to the upside, I'll probably take gains. If we get some kind of new sentiment that pops price, then that would be ideal. Okay, so that's all right for gains off the bat. Now, if I look slightly deeper, I'll zoom in a bit, I can see there's just minor rejection coming in, and we had a forceful fall before that. So it tells me, potentially there may be a newfound downtrend coming. So because we're at the bottom of this fall still, I'm going to take a very, very light short, just in case it rejects, which it does. Now I've got the option to leave it. Okay, probably would have taken it if I can pause it quick enough. There you go. So now I'm out for gain. So I don't want to re-long, because what's happening now is we're pushing into this wick. So breaking below this wick is going to tell me that that rejection is done, and therefore I can take another long. And if you look below that wick, there is actually a lot of key price action. There's a lot of rejection. There's a lot of areas, as you can see, like that. So now I'm going to take a slightly larger 0.07. I'm going to get long, and I'm going to play. Now, at this point, because we've had a reasonable fall off the top, I'm looking for a good kickback for gains. So I want something like that. That's fine. Okay, so we're out there. Now, I'm not going to take a light short this time, even though we're at early resistance, because the force of that candle is strong. Now it's being rejected, so I'm going to use my brain, and I'm going to say, all right, let's just take a light short there. Any minor rejection, I'll have it. We're not getting that, so I'll just add again on a pop-up and some small rejection. And then I'm not really willing to short anything further unless you get probably nearer the highs again, because anything in between is it's got some price action, but you can see the momentum now, so the chance of me being right drops. And at this point, I'd probably rather swap long. So even though I've got that short open, I don't need to close it, and I'm just going to swap long with double the size. So I've now hedged, essentially. I've hedged. So this is a good example because it shows you that I don't need to close out that short just yet. I could have shut it there, and I would have, but obviously it's too quick for me to catch. So now, because my long is double the size, okay, if we do pop higher, I'm likely to start picking up profits anyway. Okay, so we'll just see where that ends up. It's quite well supported, so I wouldn't be shocked if it comes up rather than down, but I could be wrong. Okay, so it's still supported. You can see you're not falling. I'll just speed this up. There you go. So I want to pause that. Now, I would have normally exited, but obviously I couldn't even see it quick enough. But anyway, I've got gains there. Now, I don't need to close this, and I'm not going to. If you pull back, I might decide to close it. So that is essentially a hedge, okay, because I flip long because of the momentum to the upside. Now, a good pullback, and I'll just take it long again, I'll probably do it around the same size as before because the risk value is similar. If you don't, I'll just short back at the highs. So really looking for something more forceful. You can see price is just still supported. In other words, there's long side momentum, which is why I didn't add here, because the probability of being right obviously drops. I think if it gets slightly higher, I will just add short like that. And at this point, I'm really looking for some rejection, so I'll slow down proceedings. If you get some kind of kickback there, that will do. Again, I'm only using the daily at this point. So you'll notice I've taken long side gains within losing money to the short side. And that is what gives us an edge, more or less. We're making money whilst we're losing it somewhere else. And, you'll always have a chance to exit those trades for gains overall at some point. Note as well, my balance or the gains I've taken added on is still higher than the drawdown. Or at least it was a second ago. So even just the fact that I'm right more than I'm wrong generally is good enough. So I've got an exposure of 0.08. It's not quite a max size, which I'm happy with at this point. So that's a nice fall there. Okay, so now I can make a decision here. Are we going to keep rallying? I know I took about $27 on my hedge long before, so I can close that one. All right, and I can rebuy, and I'll do it at 0.4 because there's momentum here and a bit of rejection coming in. So you can see a further fall there. I can add again, and I can also shut this one off because it's likely when I press play I'll get the required gains to effectively mitigate that loss entirely. Now if I don't, I'll just really leave my longs till lower. Probably won't add until about there. Now again, I can hedge this. I won't just yet. I'm going to slow this down because I want to see some price action before I make a decision. Almost back at your previous long zone, price fairly well supported. So, okay, so now with this, you can see we're hitting into previous resistance, but there is strong momentum there. So what I will do is I'm going to put a stop just to lock in some. I'm not going to stop onto the lower time frames because I can't be bothered. I would normally. I'm just going to pull it just where that level is because you can see you just bounced off it. And now I think I'm just going to close these both. I think the sizing could have been a tiny bit smaller there, but it's no biggie. I'm going to take a 4 there, 4/10 of max. Okay, so we're now just overall net gains again. That doesn't look terribly convincing. So I'll close it, play, and I'm going to short again. So you'll notice in my last video, when the price action gets very tight, very hairy, back and forth, you can really accumulate a lot of gains. This is pushing to the highs. Any rejection I'm going to add. So I'm going to add a slightly higher than last. So I've got 0.08 now. Now the momentum is strong and price is relatively well supported here. So I'm just going to kill that. And okay, so I can't catch it quick enough. I'm trying to give an example of how you could look to hedge long now. I'll add short again. And if you get something reasonable south, you'll be able to kill it. If you don't, you probably break the highs. So you can see, okay, so I'm going to kill that. And now the price is very high, but to give you an idea, I can look to, well, because this is 0.03, I could take a third of it because the drawdown's small and because we're so high up. So there's 1/10 of max size here, which is fine because we're at very early support. There's low market value, but the size is small to cater for that risk. So because we pushed up, it's very small, yes. However, you just keep doing that, you'll soon find that you recover what you had lost. Now, if we break these highs, I can't see any resistance to the left because of the data I've loaded, so I will just wait, probably. But again, I've now got the chance to see if I can get any more minor hedge gains. And at some point, you'll see that those very minor hedge gains add up to a reasonable amount comparative to the loss on this short. So that when price does come down, you know, we're still out for overall gains. Now, I think you'll probably break the highs because you're not falling. Okay, you are now. So I'm going to take another hedge long. Very lightly. There you go. Nice pop with a bit of rejection on the back of it. So I'm going to add short. 3 because it's at the highs. There you go. Bang. Straight down. Close that. I've got the option now to shut that off. I will take a loss. And I will get long. So again, I'm flat out for everything. Any bigger pull now, you can see a bit of rejection there. I'll just make it a 0.05 because you're still fairly early on. Any good momentum to the top side, bang, we're out. Now I'm not gonna short this again because if you look at the tip of that candle, it's very, very full to the upside. Oh, we don't want to do that, do we? I will take a light short, but again, because of the momentum, there's risk. Any break of the high, and that's fine. Could take a very half of the former size long in case. You know, I don't need to hedge at this point. You can see that hedge is 1/9 of the former loss. Obviously, it's very small scale, but you can see how that would go on any size account because you would just change the investment size. So long, just in case, big pop up. Now you're seeing nice rejection coming in. So I'm gonna keep it at 0.03 just because of the risk. Nice drop there. And by the way, you know, happens a lot that people watch this, they think, oh, I'm going to go off and hedge. Don't do this on your own because you will suffer the consequences. A lot of people try, a lot of people fail. It takes real practice with mentors for a long time. Unless, of course, you're on our accelerator, in which we will essentially treat you as a VIP, as we do with our VIP accelerator members, the guys who are dead serious, they want to trade for income. And they end up doing just that because they put the work in. You can't just watch something and expect to understand the skill immediately. Now, like I said, because I can't see anything, I'm just going to take this long. Because I can't see any resistance, I'm going to be very careful on any new shorts, breaking the highs. Hedge long there gives me $7. Shut that one off just in case we rally past the highs. Can add short a bit higher, keep it light. So still flat for gains. Like I said, anything bursting the highs, and I'm just taking very small little scalp sizes essentially. Well, it wouldn't be on, you know, given how long it would have taken real time. Obviously, this is skipping markets very quickly. But yeah, I mean, on the basis we're looking at it, it would look like a scalp. So I'm just going to take another 0.2 of max. Anything much lower, I can add considerably. Can look at hedging short on that former position now. So you did have a dip down, would have been ideal for longs in a real world situation. Nonetheless, can look short. Okay, so we're now breaking up higher. Got push into the highs there, so I'm going to close. Take another light short. Bit of momentum there, so a little bit of risk on that short. It's not going to be, yeah, there we go, highs. I was going to say it wouldn't surprise me. Any significant, that would have been decent for a hedge long. Couldn't catch it, really. I mean, because we're at highs, I don't want to go anything mad. And like I said, I know the sizes are small, but it's the easiest way for people to understand what's happening. If you had, let's say, 10 times the money or or more assets in your portfolio, whatever your risk sizing was, then obviously it would vary. But this is a very risk averse video, if you like. And I think personally, risk averse trading is the best trading, because it stops you having to worry about if this breaks even higher and you've got these shorts, because the shorts are so small compared to the equity. You know, your hedging activity can sustain those moves more or less. So you're still getting no kickback. I could look at hedging on a pullback to highs, previous levels, lower. Those shorts still losing money. So now I'd probably just speed it up. And then when we get that, see, that was what I was talking about. That would have been ideal. I was just too fast, so I missed it. But I'm happy to add short. Gosh, they should really get rid of that button. Or put it somewhere else. Don't want to restart. Okay, so price supported. I can see that by the way it's moving. Now, because you got somewhat of a kickback, I can look at just a tiny hedge compared to my short exposure. So anything up, you know, it's very small potatoes, I know. But like I said, over the course of this video, if I'm taking those constantly, it does add up to extinguish at least one of your former positions, which then slows your what we call rate of drawdown. And because your rate of drawdown is slower, then you can be more efficient in your decisions. So again, you know, remember as well, your DCA gains, all the new shorts I'm taking, even at highs, the gains on those add to, you know, to my overall war chest of profits to extinguish those former wrong entries with. Okay, so you've got both sides of it. It's not just hedging, it's also your overall gains on new entries. Now, like I said, I can't see any resistance. So unless price really bursts higher, I just don't really want to add. That is a very small pullback. Again, I can take a tiny hedge just in case. Okay, now I'm going to kill this, form a short, and I would have liked that to be out long. Okay, so again, very small, but it's adding up nearer to this former loss, you know, which I could probably, to be honest, just get rid of with those gains. And now, because I've only got one short on, you know, I may as well wait for something considerable. That is, you know, a bit of a pullback, matching the former size because they're both very small. So again, if you look at that, yes, it's almost $6 only, but the drawdown on the former position is only 7 or 8 times that. So by the time I've done that 8 times, I could close that for nothing, no loss, right? Plus, I would have in all of these extra short gains to factor into my overall gains taken. And pretty soon, you know, on a reasonable pullback, you would be completely out. So that's now $12. So if you add the 6 before, that's $18, which is almost half the drawdown gone. If I take another one long, okay, now it is half the drawdown. Now I take another short. So we're at half the drawdown of that former position just in recent gains. Now it's $23 out the 46. Okay. So again, like I said, it seems very small. But now it's 23 out of the 76. Now it's 30 out of the 44. Sorry, out of the 36 before. Okay, so now we've got 40 back out of the 44 drawdown. Another hedge long. It's failing, so I can look long again. So now we're in net gains on all of this, probably, depending on what happens on this next move. Okay, so it's coming to the upside. It's still supported now. It's weaker. Now, because we're nearer that short and what we're seeing is a sustained uptrend, remember that $40 hedge we took? Okay, we lost 22. We're now still 19 up. So any push up now is going to allow us to be flat out for gains overall. Like I said, yes, it's a small scale. We've only made $250. But if you did this across a wide portfolio, with larger sizes and more assets, which is typically what you would do, then you won't have a problem. But the point is, we're making money whilst we're out of the money on some positions. And if you do that, like I said, you'll sustain. There you go, massive move. That would wipe out all that loss. That would sustain you perfectly. Okay, so keep the long. There you go. And now out of that one, 312. And I just close that. And it'd probably keep going high. So flat out $307. You can see the amount of winners. My drawdown was never anything near threatening. Okay, so if you treated your dollar CAD like that, and then 10 other assets like that, and you handled everything in a nice risk balance, you didn't overexpose, you would see continual gains. And that's basically how we trade. So if you want to learn to do that and you're serious, just go under the video. Thanks for watching. See you in the next one.